The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, outside of the corn market on Thursday, there wasn't a whole lot to write home about throughout the grain livestock trade, the outside markets. It was mostly a risk-off type of day as we work through the trade. We're going to discuss it, though. What led to some of that strength in corn? Is it tied to weather concerns again? Something else? Is this market maybe a little overbought or oversold, I should say, over the last couple of days? We're going to discuss. Joining us today, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, always good to talk with you. I hope you had a great 4th of July and, fireworks in the market trade. Not a whole lot, I guess, at least on Thursday. Outside of corn, kind of just a risk-off day today.
It was, and it was another good day. I shouldn't say necessarily another, but an up day in corn that was very welcomed. And a couple of things there. The ethanol grind was strong. It was one of the strongest grind weeks in since maybe even December. So we had a good ethanol grind. So good on that front there. A little bit of technical buying again. The market sort of probed yesterday. Had a kind of a big trading range in corn yesterday, close to 20 cents. Came back, finished about unchanged. So the bears may be probing this thing if you don't want to think in the terms of bears and bulls, and they couldn't really get it done yesterday, and the bulls stepped in front of it today. Here's the interesting part. So beans are down today, corn is up, but when you look at the crop progress and crop ratings, and then you take into account the acreage report and the stocks report and maybe some projected yield numbers, you throw all that in the vat, you're still lower on overall corn supply or production since you were a month and a half ago, yet we're at the same basic price down at the bottom here. So again, an area where end users or speculators may look at this and go, well, a month has gone by, we had an increase in acres, decrease in stocks, and will likely be a decrease in yield. Maybe it's a little early to really sell this thing, off to the next leg lower. And then there's many out there who kind of think the USDA is overestimating demand, but they probably pencil in those numbers on some sort of econometric model that shows at a lower price you have a higher quantity demanded. So that might be part of what's holding or giving stability to this market, while the bean market had kind of the opposite end. You had a bit of a dilemma here with markets off today, but you're still $2 higher in November beans than you were just a little over a month ago. So kind of keep that in perspective.
Now, maybe I'm wrong in saying this, but I hope I'm right. It feels like that now we've gotten past the 4th of July, those big USDA reports, that the market's trying to find the proper value for, say, corn right now, or the proper value for soybeans, and trying to determine, what's this level that we need to be at. Does that seem like maybe what the market's trying to do right now, Bryan?
I think that's exactly what it's trying to do. So if I think about when I was in elementary school and we had the alphabet on top of the wall and it stretched from A to Z. So you're always looking up at that, and the cursive and all that. I think the marketing year is kind of like that in a calendar sense. So if you had all 12 months up there, you're always at some point in that stretch. And so when you're at the 4th of July and you're already at low prices and below the cost of production, and the crop's not in the bin, there becomes a point where it's like, well, do I continue to sell into this as a trader and hope it goes lower, or do I start thinking, we're probably low enough. This is low enough. The farmers aren't going to hedge here. End users are ready. They got their They're gun cocked, they're ready to shoot and buy this thing if it looks like the weather's going to go adverse. And the weather we've had the last several days, maybe week and a half, and the forecast weather next week and a half couldn't be a lot. Couldn't I don't think you can get it much better for the bulls or the bears in the forecast, excuse me, in that you've got above normal rainfall again predicted on the 6 to 10 day forecast yesterday, below normal temperatures. In theory, pollination goes well. But yet the crop ratings didn't improve. We had rain last week and they didn't improve. So the question is this crop beyond improvement for that 15% poor and very poor and a lot in the fair category? Jury's still out. But the rains that did fall, when you look at them, very copious in parts, frequent in parts, but a lot of the totals are still light amounts. Half inch, 3/4 inch, keeps people going. They need more. We're in a weather market, just need more rain in July when you start really pollinating and moving that crop forward.
I was talking to someone this morning and they made a very interesting comment to me. They said they were looking at some of the rainfall maps for June from NOAA and from the National Weather Service and said, well, a lot of areas across the country saw rainfall, but if you break that down, many of those areas didn't get some of those rainfall totals until the last day or two of the month of June. And I think that's something to put in perspective, is that you're right. There are some dry areas out there still, and one has to wonder if we can improve the crop conditions at this point, or if we're just stabilizing crop conditions at this point, Bryan.
All excellent points, and what stabilizing is probably what we're doing for some of the crop. So there's a couple of things as I look at that, again, that calendar on the wall, where are we? And you get into that last week of June. If you're already really dry, you need a lot of good rain, and you need widespread rain. I don't think we've had the widespread good rain. We've had widespread rain, and we've had some good rain, some great rain, some not so good. And if you're where I am, we haven't had a thing. So a couple of things I look for as we get toward the end of June, early July, as I look at on the crop ratings, not so much the good, fair, and poor categories, because they can shift whether it rains or not quite a bit. But I look at the poor and very poor, 15% poor to very poor. That stayed the same despite these rains. So that was as of Sunday. But I also, when I talk to a lot of farmers, we talk to them throughout the country, what I want to get from them is, how does their crop look? Is it a nice level flat field? Is it a tabletop field, or is it spotty and variable? And in a year like this, what I'm hearing is a lot of that variable. So when you have variable fields, and those of your farmers, I mean, we probably all understand this, that when you drive by flat fields, that's potential. When you drive by variable fields, it's a question mark. So I think there's some question marks out there in a lot of areas, and that just goes back to when it was so hot. Well, not even so hot, but just so dry that when you're in that V4 and V5 on the plant, I'm not an agronomist, so I don't necessarily sound like I know what I'm talking about, but my understanding is from talking to farmers and agronomists that corn plant is already beginning to set a year that will not measure up to a good year, a great year.
Yeah, and just looking at the drought monitor, of course, and we think about those dry areas, and I know we saw some areas improve, but yet some areas worsen up. I think southern Missouri, one area, your area there, Wisconsin, parts of southern Minnesota, eastern Nebraska, still very, very dry. So I mean, there's gonna be some need for some rainfall still here as we get into the month of July, Bryan, and there's no bones about it. I wonder though. A lot of farmers this last rally before corn kind of took a tumble after the USDA acreage and grain stocks numbers, it didn't sound like a lot of farmers rewarded that rally. And I have to think that chances are they're not going to reward themselves now at this juncture. So what are some things we have to think about risk management wise, Bryan?
Well, that's a great question. So we can all look back and judge and second guess, but we had a legitimate push higher and to levels that were not extreme. We got corn prices to where they were last fall, basically. And so when you look at that, hang on, when I look at that, I was just trying to draw up the map there. When I look at that, I keep bringing myself back around to the idea that farmer selling hedge pressure, that's not in the marketplace right now. There's no need to panic sell. For a lot of farmers, we're close to, some are in their insurance levels. They don't need to sell in there. So the selling is going to have to come from the speculative crowd. And the speculative crowd is very what's the right word I'm looking for? Um, they're very suspect to the next forecast, and so we went straight up on hot dry forecast, and then we basically came down. Uh, the reason I said there's no judgment here is that when the market's moving up like that, you're looking out your backyard, you haven't had a rain in 4 or 5 weeks, and you see your crop deteriorating. It's really hard to step in front of that and say, well, I better start selling in case the forecast changes and the funds sell and speculators sell and farmers sell. It's usually kind of a slower turnaround than what we saw. This straight down business followed up with, if you were bearish, you got everything on your checklist. You got big forecasts that change. You've got actual rainfall. You got a bearish USDA report. You got it all. And here we go. And you sit here with the market, back down to levels where we were. I don't see farmers aggressively selling anything here, but the thing they can do is they can say, okay, now again, we're looking at that map on the top. You get in July, when you get rallies in July, it wouldn't hurt, especially if you look and you got some rain. Get your price orders out there. So we have a couple of big up days. Maybe you can get some corn sold into that rally.
We're having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. And Bryan, before we segue to livestock, any other final thoughts in the grain trade? I know we haven't mentioned wheat yet, a bit of volatility there. And obviously the soy complex was under pressure Thursday. Any other thoughts in the grains here real quick?
Well, we didn't mention wheat. And yesterday, had a big update in wheat and growing concerns that the spring wheat crop needs some rain, that the Canadian prairies are again, turning drier. We gave some of that back today. The marketplace, though, is still pretty volatile in wheat country. So Chicago gave some back. Kansas City looks like it finished a little mixed, and then Minneapolis actually steady to higher. So we're in the throes of weather markets for the spring wheat. As far as the winter wheat is concerned, harvest results, what we've heard to date, soft red winter wheat numbers are pretty solid. So, rallies probably should be opportunities to move some of that wheat. And if the market is volatile, you need to sell the rallies in the wheat. The big thing yesterday that was out there too, and we just don't know how to read that, is the Ukraine-Russian war, and who's setting munitions on a nuclear plant and one blaming the other and all of this kind of business. So I'd say just stay tuned there. Probably the other big thing is, again, in the bean market, make sure and reward rallies. The world isn't going to run out of beans. It's tight. And we know it's tight here in the U.S., but I still think you got to be of the mindset that if we can add anything more to this November and get it toward 14, if you're behind on sales, make the catch-up sales.
Bryan, over in the livestock trade, cattle, another day to the downside across live cattle and feeder cattle. Feels like a little bit of a tug of war between packers and feedlots this week, trying to get some cash activity going. What's your thoughts in that cattle trade overall?
Well, I think that's exactly. I think you've got the cattle producer wanting more, obviously, and I think the packers hesitant. I think they want to get a better handle on what the 4th of July disappearance looked like. But step back, big picture, cutouts are strong. The spread between choice and select, Jesse, continue to suggest that the feedlots are relatively current. Things look good there. You got new contract highs established here just a few sessions ago on all of the deferred months in the live cattle. Still good market, good bull market. The jobs numbers today stronger than expected. So, we keep hearing about recession and the Fed raising rates, which are both probably out there. But, from an employment perspective, consumers are still working, and they're working more apparently. So I don't know how to approach this market other than keep stops under it, keep buying puts. We're bullish. It's hard not to be bullish. We still think that tightening supply goes into at least into the better part of the new year, and we go from there.
Hog market, we saw strength again in hogs to start Thursday session. That faded a little bit in the front months as we got to the close. I just have to wonder. I mean, $100 hogs, that feels like very lofty levels in those front months right now, Brian.
Well, they're lofty levels, but they're not levels we weren't at before.
True.
So the question is, why in the world do we fall apart as hard as we did? And that's called volatility. It's called market movement, all those kind of things there. But when you look at where those, July was off a $1.22, big run today, well ahead of the cash index. Those two are probably going to converge here between now and the middle of the month when the July and cash when July goes off the board. Yeah. So the question is, why do we get the $75 when we came from 102, and then now we're back to 102? So it's a fair question. I think that's just the ebb and flow of the marketplace. Great hedging opportunities though for your summer month hogs right now. We're still just today we closed at 105, but $100 hogs. I think a lot of us thought that was a foregone opportunity. It's there. You got a little bit of time to do it in July. August contract 97. I think we start hedging into that as well. We do expect tighter hog supplies because of the higher price of corn this past year. And then there's big blowout hog prices where it was very difficult to imagine that anybody was making money who's producing hogs. And then we heard about hog slaughters or sow slaughters. But I think you look at the big picture, you still have to expect that that we will need to be selling rallies and hedging rallies. Keep in mind, we've kind of made this big argument. Why in the heck are cattle going up and pigs going down? Well, they corrected that really fast during the last 3 weeks.
Well, good thoughts as always, Brian. Final question. Floor is yours on this one. Any other topics we haven't mentioned or anything you want to reiterate today? I'll let you take it away here for us.
Well, we didn't talk about the dairy market, and that trend remains down, and maybe best not to talk about it because it's the same story every week, just too much production. The plants are pretty much at capacity. You hear some stories about dumping milk or patrons being turned away. They just can't take. Those are the ugly side of an industry that has a pretty tight funnel when things get full and when the funnel overflows. So it's self-regulating. So I'm hopeful that we're getting to the point where the market is close to its low and trying to find its low.
Well, Brian, as always, if folks want to reach out to you and the team there at Total Farm Marketing and get some advice with their marketing strategy, what's the best way to get a hold of you?
Phone call, Jesse, 800-334-9779. That's the best way. Email is fine. I'm Bryan with a Y, Bryan, at totalfarmmarketing.com. We got a great website, totalfarmmarketing.com. Take a look there. A lot of great resources. We've been around a long time, and we got great people. So there's various means to get a hold of us.
Well, as always, we appreciate the time. Bryan Doherty with Total Farm Marketing. Thanks so much. Have a great weekend. We'll talk to you next week.
All right. Thank you. Appreciate it.
That's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.